Welcome to everyone. This video is the first video of a series about cycles in stock market. During this series of videos you will learn all the secrets behind the cycles, how powerful, profitable they are when using them to trade the stock market. After watching the all series, you will be able to trade successfully the stock market with a very high degree of accuracy and increase your profits by using cycles in any market, like the S&P 500, the Dow Jones Industrial Average, the gold, the bitcoins, and many more markets. Also, every week I will publish some update about different market. Basically on these weekly updates I will cover one instrument, like the S&P 500, the Dow Jones Industrial Average, the bitcoins, the US dollar and the gold market. Before we start, make sure you read carefully the disclaimer. If you like this video, please click on the like button, subscribe to make sure you don't miss the next videos. This week we will define the cycles and how they works. Let's start first with the cycle definition. Cycles are a series of events that regularly repeated in the same order. We can see on this chart the regularity of the peaks and the troughs. These two charts represent two different types of cycles. Of course there is more than two kinds of cycles. There is seasonal, fashion, weather, and business cycles and so on. In the stock market, the cycles like any other kind of cycles are not repeating perfectly like on this charts. It will be too easy. But there is one principle, called the principle of variation. We will see more about this principle later. The cycles I am using to analyze and trade the stock market are the one discovered by J. Hurst. J. Hurst was a 1970s American engineer. If you are interested to study his all work, you have to go through a 1,000 pages book. Which I did, and it was an amazing experience, and it totally changed my view on the stock market. Hurst built a list of cycles with their duration. He called that the nominal model. The Hurst nominal cycle start with the 5-day cycle. Actually you can use the Hurst nominal model intraday too. But this is little bit more complicated, so let's keep simple and use his regular nominal model. All the cycles are related to each other's by a ratio of 2 to 1. Meaning the 10-day cycles is twice longer than the 5 days, the 20 days twice longer than the 10 days, and so on until the 18-month cycle. After the 18-month cycle the ratio changed from 2 to 1 to 3 to 1 to the 54-month cycle. Meaning there is 3 18-month cycle in one 54-month cycle. The 54-month cycle is also the 4.5-year cycle. After this 4.5-year cycle the ratio switch back to 2 to 1 until the 54 years, which is 3 times longer than the 18 years. Hurst built his nominal model as reference, because in reality as we can see on the chart the 10-day cycle is an average of 8.5 days. Because the principle of variation sometime it can be 7 days long and sometime can be 10 days long, it's always an average. The reason is cycles are not statics. Another very important rule is, the cycle's length are always in calendar days. They are alive 24 hours a day, 7 days a week. It's for this reason, sometime a cycle low may occur during a weekend. Let's spend little bit time on this cycle chart to have a better understanding of ratio and synchronicity. Let's study this 80-day cycle and the ratio between each cycle. The first cycle to make a low is the 10-day cycle. Here is the ideal cycle peak. Why ideal? It's because sometime the prices peak before or after the cycle peak. When it's occur before or on the left side Hurst called that time translation in this case, this is the left translation. When it's occur after or on the right side of the cycle he called that the right translation. We will see in another video the important implication of the different time translation. At the time, the 10-day cycle bottom, it's the time for the 20 days to peak, right there. When the second 10-day cycle make a low, by the principle of synchronicity, the 20 days bottom too. Then we start again the next 10-day cycle. At the time of the fourth 10 days and the second 20 days, the 40 days will form a low. Here the next 10 days, 20 days, 40 days, and by the principle of synchronicity, the 80 days cycle. The 80 days cycle correction will be more important than the 40 days, since the 80 days cycle is 1 degree higher than the 40 days. It's very important to understand the principle of synchronicity, especially at the time of uncertainty. In stock market all cycles are synchronized at their low. Let's see the Hurst synchronicity principle on this gold ETF chart, the GLD. that the instrument I use to analyze and trade the gold market. As you can see with the green vertical dash line is the first 20 days cycle low. Then the second 20 days cycle low occurred here at the blue vertical dash line, forming at the same time the 40 days cycle. Then the third one occurred at beginning of April. And the fourth one, end of April, the purple dash line, forming at the same time, the second 40 days cycle and the 80 days cycle. The next 80 days cycle low will be expected around end of June, the red dashed line. Using the Hurst cycles we can establish prices target. This table shows for the year of 2023, the accuracy rate for each cycle. When the market give a price target, and this target have been fulfilled, the accuracy rate is very high. In red, the worst performance for the 6 following markets. We will see in another video how to get those prices target. On this 10-day cycle chart, we have an example of how the prices target are triggered. From the beginning of March up to end of April, we have 3 signals. The first one here, providing this target. The second one is on the downside with this price target. And the last one was on the upside with a 38,388 target. All targets have been filled. In almost 2 months, the success rate for the 10-day cycle is 100%. This is the end of this first video on cycles introduction. Thanks for following me, and to make sure you don't miss the next important videos, don't forget to click on the bell button, subscribe and click on the like button. Thank you.